If you can't identify where the daily bias in the market is going, you will end up taking lots of unnecessary losses in the marketplace. No matter how much advanced your entry pattern is, whether it may be the ICT or SMC, still you will end up taking lots of unnecessary losses. Whereas once you understand the daily bias, you will end up taking these type of sniper entries like me and my students and milk the profit. This is what separates you from the 99% unprofitable traders to become the top 1% trader. So watch the video till the end to become the top 1% trader. Market moves in cycles. 99% of the traders don't know this fact and try to take lot of trades in the ranges and end up taking lot of losses. If we understand where we are in the liquidity cycle, we can easily plan our trades. So the market maker move the market in 3 phases. In the first phase, they will accumulate the orders. They will accumulate the price in the ranges. So this is where they will inject the liquidity into the market. So if you think the market, and to inject the liquidity, they will print this type of chart patterns. If they print this type of chart patterns, lot of retail fishers will be interested in putting the money into the market. So this is called as the liquidity injection into the market, and also you can call it as the accumulation. So when the market maker is doing this accumulation pattern, it means they are injecting lot of liquidity into the marketplace. You should be aware of the fact. If you don't know about this all the things, you will end up taking lots of silly trades at these liquidities and end up taking lots of losses. So what you should wait for? You should wait for the manipulation. At the manipulation phase, you can exactly know that market maker manipulated everything. Now the transaction was completed. What is transaction? For example, if you went to the supermarket, if you wanna get anything, you should give money, then only you can get the goods. Same thing happens with the markets. Here the money has been collected. Now the price can move into the desired direction. This is how the prices will move. Again, if you see accumulated, they injected the liquidity, they took the liquidity and they distributed the price. This is how the mechanics of the market works. We don't trade any type of pattern trading. We understand where the money is and wait for the transaction and we will trade. That's why our equity curve will look smooth, small losses and big wins. Whereas these retail people equity curve will look like this. Ping pong. As a big fish hole, you should not be in this type of equity curve. This is not good for trading. Your equity curve should look like clean. If you understand this liquidity cycle, your equity curve is going to look like this. So the first thing you should identify in the price is where is the range, where is the injection is being made in the market, where is the accumulation. Now I will show you the different types of accumulation that market maker uses to inject the liquidity. These are the 3 types of patterns that market maker use to inject the liquidity into the marketplace and trap the people. The first thing is ranges. First they will range the price, and lot of retail people who use the supported resistance will have lot of buy orders here at this breakout. After seeing the breakout with the huge volume, they will put lot of buy positions here, so that the market maker get access to the lot of liquidity so that they can sell. Simple. So that's why they will produce these type of injection pattern to inject the liquidity into the marketplace. No matter what time frame it is, this stuff happens in the daily time frame, 1 minute time, monthly time, because the price time is fractal. And also the second most important thing is the trend line liquidity. They will form the fake trend line and they will create a fake break of the structure and they will reverse. After taking all this liquidity, they will reverse. And also the main thing is SMC liquidity. They will create the fake order block where lot of SMC people will have their stops and they will trigger the stops and they will go. The first thing is, you can see this stuff all over the YouTube teaching the same thing. The importance is you should understand why the market will reverse after taking the liquidity. This is where the market mechanics will come into the place. If you understand the market mechanics, you can easily figure out why the market is moving after taking the liquidity. Because here lot of people will have lot of buy positions here, here lot of people will buy here. In this level lot of people will buy because they think this is the great support level, and they will have lot of buy positions here and their stop loss will be somewhere around here. So what will happen is, and also there are some breakout traders who are directly selling. If you see, this buy, sell and direct sell orders completely adding lot of liquidity to the market makers. Now the market maker can easily buy here. So this is why they will trap all the people. They will trap buyers, they will trap sellers at access to lot of liquidity, and they will go. The main reason they will do this all type of cheeky stuff is to execute their orders, they need lot of liquidity. Whereas retail traders, we are just 1% of the total liquidity in the marketplace. We can execute the orders wherever we want. We can execute the orders here, wherever we want. Whereas the hedge funds, big banks, they can't execute like that. They will get lot of slippage problems because because if you buy a lot, there should be another person selling the lot. Simple. As we are making the transactions with low amount, there is no liquidity problem for us. A market maker can fulfill our orders. Whereas for the big banks, there should be a lot of liquidity that is required to take the opposite side. This market is a zero-sum game. One person loses, another person wins. This is the mechanics of the marketplace. So that's why they need liquidity to be engineered to take the position. So that's why they exactly know where the liquidity is and what patterns to produce to induce the retail traders to be in the false direction, and they trap it and they get lot of liquidity. They will execute their positions without getting slippages, because if they execute their positions where the liquidity is not there, their some positions will be executed at this level, this level, this level. This is not good for their investments and trading. So that's why they will wait for the liquidity to be generated and manipulation, and they will execute the positions. Can't find this stuff nowhere in the YouTube or anything. This is the real mechanics of the marketplace. I have spent my last 5 years researching about the real mechanics, how the price moves, how the exchanges works, how the different asset classes work, and this is how the market mechanics work. Whether it may be the crypto, rug pool or anything, this is how the market makers manipulate the price action. So now we will look into how to identify the real direction of the market and daily bias using this liquidity injection pattern. In order to identify the daily bias, you should identify the last recent liquidity sweep in the daily time. If the last recent liquidity sweep in the daily time frame is bullish, you should focus on the buy. You should focus on only the buys. This is how the 1 hour time frame will look like, and you should only focus on the buys. Then you will get easy swing trades, easy swing trades. But most of the people, what they will do is they will take the trades, unnecessary trades, every liquidity. They will take the trades from this liquidity, this liquidity, this liquidity, because they don't aware of the fact that the higher time frame is bullish. They will think after the Asian liquidity is taken out, the price should reverse and go to the moon. This is not gonna happen. You should always have an eye on the higher time frames, because these lower time frames will get the data from the higher time frames and move accordingly. There is no fact that the market is going to reverse after the Asian liquidity is taken out or anything. If the higher time frame and the Asian liquidity are aligning each other, you can get swing trades. For example, if I get any trades here, this is a swing trade, because these both time frames are aligning each other. Like the smart money people will do the multi-time frame analysis, we are doing the multi-time frame liquidity analysis. The time and price is fractal. Here you can get a swing trade, here you can get a swing trade, here you can get a swing trade. This is how you can easily identify the daily bias in the marketplace. First thing, you should keep in mind what is the last recent liquidity sweep in the daily time frame. Then you should align the time frames and only take the trades in the direction. Then what will happen is you will end up taking only high probable moves with lot of error, lot of win rate, and you will not fight against the trend. You are going with the trend. This is very important. That's why me and my team equity curves will look like this, whereas yours equity curve is looking like this, ping pong, because you are taking a lot of unnecessary losses at every liquidity, previous test liquidity, like that. We only take the liquidity trades only if the time frame is aligning with the trend. This is the major difference between the unprofitable liquidity traders and the profitable liquidity traders. What this lot of the people will do is they will learn one entry pattern and apply directly without knowing the higher time frame bias. They learn about the silver bullet, they will apply the silver bullet without knowing the higher time frame bias. So that's why they will never be profitable in the marketplace. They will be break even, or they will make only some amount of profits in the marketplace, because they don't understand the higher time frame and they can't hold the trades towards the higher time frame direction. This is the same problem I faced back then 5 years ago, but after then I keep on refining and back tested, and we got a lot of data engineers in our LIT community, and we back tested a lot of past years of data, like past 20 years of data. We back tested and came up with this stuff, and we still keep on refining to every day to improve our edge in the marketplace, because we are competing with the smartest minds in the world who are operating the markets. These markets never change. They will look for the liquidity and they will go. This is how the market mechanics works, and the simple thing you should do is identify the last liquidity injection. And also the second point is you should figure out which phase the liquidity cycle is in currently in the daily time. If the liquidity cycle in the daily time frame is if the price action is looking like this in the daily time, what you can do, this is very low probable conditions to trade. This is a very low probable conditions to trade. This is where lot of immature traders will take unnecessary losses, because they can't wait patiently until the range get taken out. This is where sheeps are getting trapped. Sheeps are getting trapped in and out. Sheeps are getting trapped because the sheeps will take trades in this liquidity, because there will be a lot of 15 minutes liquidities in this daily time zone. Their equity curve will look like this. If they are trading in these time zones, they only make money if it's trending. They only make money if it's trending, but they don't understand they should not execute in this phase. This is for the sheeps. This phase is for the sheeps, where the liquidity is getting injected into the marketplace. If you take the trade in these ranges, your TP should be at the next recent liquidity targets. This is how we understand where to target and when to target the next daily liquidity and get the high RR, because the data is speaking. And also main thing why 99% of the people are not profitable is they will switch the strategies. They will trade retail to the SMC, they will trade SMC to the liquidity concepts. Back then I used it to be like this, and I saw many people who used it to be like this, but now I got the checklist, 9-point checklist to enter the trades. This is how you should become profitable. You should need a proper setup and strategy and checklist. All the checklist points in your strategy is aligning only. You should take the trade. Then you can be easily profitable in the marketplace. Whereas me and my team wait for the 9-point checklist and wait for the whole liquidity and whole sheeps to be trapped, and then we enter the trade and our equity curve will look like this. Now I will show you some examples which I took this week using the daily bias I just shared now in this video. The first thing you should identify is where the liquidity is getting trapped. You see here, I identified a clear trend line where the people are getting trapped, here. Lot of volume is trapped. So there is lot of liquidity that is accumulated here, and this is the trap. This is where the transaction happened. All the money is collected and the market is ready for the distribution phase. Accumulation is completed, manipulation is completed with a huge speed and aggression. These market makers exactly know how to alter the human behavior. They produce these type of price action to induce more and more people. While seeing these big black candles, the retail people get FOMO and they will directly sell without knowing anything about the market. They will just directly sell. They don't know at which phase we are in the higher time frame, etc. So they exactly know how to do it because we collected a lot of years of data and they are keep on doing like to manipulate the people. So here we got manipulation, and also the next day we got Asian liquidity swept and we bought here. If you go to the 15 minutes, if you observe here, there is a clear Asian liquidity that was taken out. There is a clear Asian liquidity here that was taken out, and we got a buy position in the 1 minute time frame. After the simple break of the structure at the money level, we got a simple trade. And also I saw a lot of people took the sell at this liquidity, and all hit the losses because they don't aware of the fact of the higher time frame at which phase the market is in the higher time frame liquidity side. That's why this is very important. You should always go with the trend of the higher time frame. Then you can get this type of sniper entry. Once even I take like 1 to 2 losses, it's no problem in my equity curve. My equity curve still looks like this. I'm getting like 20 RRs and 30 RRs like sniper entries. This is how my equity curve look like. Simple. This is the trade that was taken by my students, and also I got one student named Malin who made around $6K in 2 days taking the same trades that I showed you in this video. It's just because he's putting on the work rather than wasting time on watching YouTube videos. You should need an exact strategy to be profitable in the marketplace. Otherwise, you can't make money. You will end up keep on losing and wasting your time by watching just a YouTube video. You need exact checklist and add exact videos, and you need a proper mentor who had data backing up with the strategy. And also this is the another trade. We took this sell. Same thing. We identify the liquidity cycle. If you observe here, the market is forming an accumulation. If you observe here, the market is forming a small accumulation. So this is where the trap happened. Can you see here the speed and aggression taking the liquidity? Same here, speed and aggression taking the liquidity, because I told these guys know how to alter the human behavior. By seeing this big push towards the upwards, everybody will get FOMO and they will buy without even looking at the high time frame direction. But what we did is we just executed the trade at the top of the build-up. We wait patiently to get these trades. If you see the price action here, we just waited for the change of character here. Order block, simple. With 4 pip stop loss, we got this high RR trade, simple. And also I have seen many people taking the trades here, taking the trades at every silly liquidity. This is why you will take lot of losses and your win rate is very low in the market. Your equity curve will definitely look worst and you will keep on failing challenges after challenges as you are taking lots of unnecessary losses, which can be avoided once you understand the daily liquidities. Remember guys, you will lose a lot of money and blow out a lot of challenges if you don't have a proven strategy that was backed up with the years of data. This is very important. You can't be profitable in the markets by just watching a YouTube video about the concept. You should need an edge that is going to appear over and again in the marketplace. Whereas I refined this liquidity inducement theorem for the past 5 years by keep on refining and adding up lot of data. But if you put in the work and lot of hard work in backtesting and everything, you can eventually change your life and travel the world and simply trade. Literally, I am receiving tons of messages from the YouTube community who are watching my videos and creating their own strategies based on the concepts by just watching the videos over and again. You can watch ton of videos about the liquidity inducement theorem in our YouTube channel, and if you want any other videos regarding any other topic, you can just comment on the video. I can make a clear explanation about the topic you need. Or if you are a type of person who want to fast track their growth and serious about the trading and want to get funded in 90 days, like these people who are consistently profitable in the markets and milking the prop firms every month, day in, day out, like Eduardo, who has made $1,300, and also like Friday, who made $1,500, and also Ajibola, who made $1,200. They are not doing any magic spells or anything. They also came from the same situation like you guys are. They are also having a lack of strategy problem, and they have a lot of mindset issues. This guy Eduardo came to me 2 months ago, and he don't know where to look at and where to look for entries or anything. I completely teached him, and we worked on his mindset, beliefs, etc. And I gave him my 9-point checklist LIT, and he became continuously profitable trader after 60 days. This can be you. If you put in the work, then you can change your life and retire your family. The main reason why they are doing this much good and when compared to you guys is I have spent 5 years of my lifetime refining my strategy over and over and again, day in day out, backtesting 16 hours per day without sleep some days, and came up with the strategy by constant lot of losses and lot of lessons, lot of blown challenges. I developed this strategy which has over 80% win rate, which can benefit a lot for your mindset and your peace. Then your equity curve is like going to look like a rocket, and your profit splits will look like this every week in, week out. So you are not going to go through all the hell I have gone through, and you are taking your first trade by using all the data I have collected. Your first trade is going to look, and it will come up with the 80% win rate trade. So this is what gives you the edge, and you can milk the prop firms. If you want to become a finite trader in 90 days guaranteed and want me to one-on-one mentor you and access to the liquidity inducement theorem, 15 GB of exclusive private content, and want me to review your trades in the journaling template, which you will be added once you join the one-on-one mentorship, and also live trading 3 times per week with the private community members, and lifetime access to the LIT private Discord and video mentorship tab, where the one-on-one video recordings will be posted, and also access to the journaling template where you will be journaling your trades, and also the backtest of the 5 years of the edge we use. So click the link in the description if you want to become a funded trader in the 90 days guarantee. I am so confident, excited for the one-on-one mentorship, guys, because I have seen ton number of students who are facing the same type of problems like you, with the consistency of the trading and losing challenges over and over and again because of the lack of strategy and risk management and psychology. And after joining the mentorship, they got insane changes in a 1 month itself, and they got funded in the 90 days. I can give you guarantee that you will be funded in 90 days if you put on the work and if you complete all the tasks I gave you in the one-on-one mentorship. And if you are still struggling to get consistency in the trading after the 90 days, I will do the live trading every day with you until you will get funded and become consistently profitable in trading. This much of guarantee and confidence I can give you about the liquidity inducement theorem and become a consistently profitable trader using the hidden layer of smart money. It is a very wise decision than buying a prop firm account without having a proper knowledge, when compared to the investing in the quality education and acquire the edge that was proven back in the data.